claim due to their internal team not aware or there is some mistake, whatever the reason, because while booking the invoice, they did not put this amount as a tax. They put whole amount as expense. So now this 130,000, they cannot deduct again in the corporate tax return. We are not referring to the VAT. VAT is not our the discussion. I'm just highlighting the practical scenario where this is error are there. Anyhow, let's move to the one today topic. Hope Mr. Arslan, your point is clear. And one of the more point, okay, we'll discuss after a couple of minutes. Okay, accounting profit, taxable income, 8 adjustment in accounting profit. Okay, so sorry. Actually, here we are starting from here. We're starting from here and making the 8th adjustment in previous slide we already seen, and we have to reach over here. We have to reach over here. Okay. Now the third adjustment we're saying the intra-group transaction. Okay. The intra-group transaction, whatever the intra-group, the tax group. Okay. Just now in the previous slide, we seen the couple of points. Then we said the tax group consideration. So now here we have to see the tax group consideration. What is the rule for the tax group? Anybody would like to explain what is the rule to make the tax group? What is the city law guideline to make the tax group? I believe we already discussed in the first or second session, tax group. %95. Direct holding, effective holding. Fine, thank you guys. But if you mention the direct holding, that will be complete this sentence. Okay, if you have the tax group, then you have to eliminate the intra-group transaction. Because you are buying and selling. So the profit you cannot generate between the group. This Mohammed Salman mentioned 90%. There is no 90%. 95% direct holding. There is no 95%. Okay, we said tax group, we have to eliminate the intra-group transaction. We have to make the consolidated financial statement as per the IFRS. Hope this point is clear. Now the fourth point, transaction with related parties and the connected person. Transaction with related party and the connected person. What are our related parties? Anybody would like to explain? I appreciate if anyone would like to explain what is the related party. What would be the shareholding that we categorize as a sister concern or the company have 10% shareholding? That can be our related party. Yes, the fourth degree is connected person, that's fine. Now see, there is a difference between the related party and the connected person. The fourth degree ID is the information is false for the connected person. But I'm just looking the answer for the related party. Mr. Shahab is saying the 20% shareholding or significant influence. The definition of related party may be differ in accounting and may be differ in the city law also. The definition of related party in city and the accounting would be same or no? Please mention the related party definition as per accounting standard and as per city law. Both are same or no? Okay, not same. So what is the related party definition if we're considering in the accounting? What is the definition in accounting is the I believe it's 28% or more in accounting. It would be as per accounting. But in city law is saying the 50% or the more than 50%. Here the important is the 50% or more than 50% as per city law. Because the subsidiary will be our related party. And what is the definition of the subsidiary? A share, how much shareholding would be? How much will be the shareholding? So we are saying that 25%, there will be other terms and condition. One of the basic rules, what we have to understand, the 50% shareholding as per the or more. 50% or more will be as per now the account related party for the city law is more than 50% shareholding. This is our related party. The accounting we will not consider. So now here the point is that maybe some treatment we have done adjustment in our consolidated financial based on the accounting where the 28%. So are this financial, are this consolidated financial, are this audited financial workable for the city law, for the corporate tax return? The financial where our subsidiary definition or the related party definition is 28%, are this financial are can be used for the corporate tax return, for city return? Please note down this key takeaway. I appreciate, please note down this takeaway, so the key notes and summarize and share in the group also. If you are, because such key points at the end of these sessions, at the end of this course, we will ask these key notes from you guys. Because if you are not focusing that, you are not keeping the key notes, then there's no benefit. I appreciate you guys keep the notes for this. Making the notes, it will help in the practical life also. So here we understand the consolidated audited financial statement as per IFRS, it will not be considered as a final. We have to make still some adjustment as per the city law, whereas the related party is a 50%. Maybe there is adjustment or maybe not there adjustment, but we have to note down and follow as per the same. Okay, hope this point is clear. Now I'm just gonna back. Erase all. Okay, now the fourth degree is dealing Article 37, city law related party must be at a ALP. While we are discussing the related party and connected person, we must say ALP rule market value plus minus. With whom will make the transaction? With natural person, fourth degree that we already understand. The second, the juridical person. Now we are going moving forward to the fifth point, unrelated gain and losses. The fifth one, unrelated gain and losses. What is that? Anybody would like to explain? I appreciate anybody would like to explain unrelated gains or the losses. I believe here is a typo error. This would be unrealized gain and losses. Here's the typo error. It would be unrealized gain and losses. Okay, now previously I mentioned there is a one complete session, 2-hour session. I uploaded on the YouTube. How many participants that go through? Quickly, please response I mentioned in the previous session because that topic comprehensive session. Ms. Kinjal, okay, you go through. Please share the link in the same chat and let them other people also see that. And if because that is the one of the the I in the previous Ms. Kinjal, please share here. But meanwhile, I'll explain the concept. Why I'm mentioning all over there. Earlier in the previous session, I discussed okay the how the in the schools teacher they are discussing teaching the kids. First, they focus on the words, the alphabetic, like ABC. Then they focus from the alphabetic to the word. From the word, they will focus on the sentence. From the sentence, they will focus on the paragraph. So this unrealized gain and losses, this is the one of the word. This is one of the word that we needed to make the paragraph. So if I'm going to cover again, that will be additional one session. So I appreciate if you guys go through this. Just quickly, guys, follow this link is shared and confirm you guys. And I appreciate if you subscribe that also because the same video I'm uploading over there. And the meanwhile in future, the main changes, the main key area will be available on the same. You guys can subscribe the YouTube channel and follow. Even you look other video or not look other video, but this topic is we need it because now in upcoming session we will do some practice also. But while doing the calculation also, this is needed to be understand. Ms. Kinjal, I appreciate if you I'll unmute your mic and share the insight that you have about this.
Hello.
Please unmute yourself.
Hello.
Yeah, please.
Yeah, so
Please enlighten about this topic.
there are two types of gain, like unrealized gain and unrealized losses. It is like whenever there is a, like as per the IFRS, we need to record whenever there is a fair valuation for the fixed asset or for other asset and for the financial asset, we need to do some adjustment as per the IFRS for a financial instrument. So in case, and while filing the return, there are two types of election. Like either we need to go based on the realization basis or based on the unrealized basis. If we are going through the realization basis, it means whenever there is a actual gain or losses on the sale of asset or fixed asset, I mean capital asset, at that time we need to make the election. I think it's election A, no, election B. And in case of other asset, it is election A. So there is two kind of election for unrealized and realized gain for different kind of asset while filing the return. And this fair valuation model is, as per the IFRS, we need to check the actual impact in the PNL and in the OCI for fixed asset, whether it is on fair valuation method or cost method or revaluation method. If it is revaluation fair value, then it is not recorded for fixed asset. In OCI, it will go, the impact will go in the PNL. So all this we need to keep in mind while filing the return if we are going through the realization method. And in case of unrealized, then we need to check whatever is there in the profit and loss.